Just give us a few more minutes. We are still having more participants joining us. Hi, good afternoon, everyone, and welcome to the first of 3 webinar sessions with the theme Road to Bursa Malaysia. So this is the first one. We will have the second one next week and the third one the following week. Each of the sessions, there will be a speaker from Bursa Malaysia, from the listing development of Bursa Malaysia, and one speaker from our firm RDS. Quick introduction. So my name is Eugene. I'm the partner doing capital markets and IPO. I have with me Farrish. Farrish is the Vice President Listing Development of Bursa Malaysia, where he's responsible for development of initiatives and strategies aimed at enhancing the attractiveness of Bursa Malaysia as the preferred listing destination for companies. He has over 19 years of experience in the financial industry, with more than 11 years in investment banking, where he was involved in IPOs, corporate finance advisory, mergers and acquisitions, and equity and debt fundraising. The other speaker will be my tax partner, Sarah. So he needs no introduction. I think most of you may have attended his talks or webinars before. I think he probably does 180 talks and webinars in a year. So clearly no introduction. I'm not going to introduce him. Now, very quickly, we have a 1 hour session. So we hope that after the presentation by Farrish and Sarah, we will have a Q&A. Now, if we don't have time to respond to your queries, because we've seen the list of participants, we have those who are probably very familiar with IPOs and those who are less so. I suppose, Farrish, you could actually give your email address later, right? So that they can actually send you an email. And of course, at the Q&A session for the attendees, for today's attendees, if you look at your screen, if you look at the screen right at the bottom, there is a Q&A function. So at any time, you can click on the Q&A and type the question. You can actually say who is the question to, but I suppose if it's tax related, then it'll be Sarah. If it's IPO, generally will be to Farrish. Now, just a reminder, please do attend our second and third session because different speakers and they'll be presenting on different topics. So there may be a little bit of overlap, but we will be touching on different areas or different focus areas of IPOs. Now, the reason why RDS we have decided to have this series of IPOs in Bursa Malaysia is because recently you can see that IPOs on Bursa Malaysia has been very vibrant. If you look at 2020, of course, that is like a pandemic year. There was 19 IPOs, 2 main, 10 A's, 7 lead. And 2022, you can see that's 35 IPOs. So you can see that there's a I wouldn't say rebound, but there's an increase. 35 IPOs, 5 main, 25 A's, and 5 lead. And what I've observed is there is a lot more A's market IPOs. There's actually quite a lot more, and quite a number of the A's market IPOs are quite sizable. So in 2022, the IPO of Unitrade became the largest listing on A's market of Bursa Malaysia by market capitalization since the market inception in 2009. With a market cap of RM 500 million based on the issue price. And in January this year, you have the IPO of Nation Gate with a market capitalization of RM 788 million based on its issue price. So it's the largest A's market. So it's actually some of the A's market. Not only do we see an increase in the number of A's market listings on Bursa Malaysia, but you also see an increase in the size. So you've got a lot more A's market IPOs. They're very sizable. They will qualify for main market by market cap, by the profit track record, but yet they've actually elected for A's. So there's quite a lot of developments or quite a bit of recent trends. Okay, so without further ado, Farrish would kick off our series of 3 webinars. And over to you, Farrish.
Hey, thanks, Eugene. And thank you so much for that kind introduction. Let me just share my screen for a bit. Can everybody see the screen?
Yep, Farrish.
Okay, thank you, everyone, and a very good afternoon. I trust everyone is safe and well wherever you are. So I think Eugene has already given a brief introduction myself. So just to put it in layman terms, what Eugene just said, I promote the IPO market over here in Bursa Malaysia. So we have the 3 markets, the main A's and lead market. So I promote all 3 markets here and also try to develop the market as well. So the main point is trying to create awareness of IPO out there to everyone who's interested to know. And if they want to take on the IPO journey, they can always come to Bursa Malaysia. I'll be more than happy to assist you where we can. So as Eugene rightly put, this is a three-part series. So I'll be just covering just a brief introduction of what the IPO process or the listing process is about. My other two colleagues will also look at other parts of the IPO journey. So the next one will be more on the considerations, things to look out for when you do an IPO, while the third one will be on the parties that will be involved in an IPO exercise. So for me, I'll just give a very brief overview because I only have 20 minutes. So I'll try to make it as brief as possible as per the title. So let's just go through a bit on the introduction of Bursa Malaysia. So I think a lot of people know who Bursa Malaysia is. So what Bursa Malaysia is, we're a multi-class asset exchange, the national exchange of in Malaysia. And not only that, but we also have won numerous awards over the years. Recently, we were also named the best stock exchange for Islamic listings by IFN Awards for the last 5 years, since 2018 to 2022. And in 2021, we were also named the Exchange of the Year by Regulation Asia Awards. Now, as I said, we are also multi-class assets. So most people know Bursa Malaysia as places where company shares are traded on, but we also have other types of instruments listed on Bursa Malaysia, such as structured warrants, exchange traded funds, ETFs, and exchange traded sukuk and bonds as well. So that's also listed on Bursa Malaysia. So it's not just equities, but we also have debt being listed on our exchange. But in terms of equities, we have close to 1,000 companies listed on Bursa Malaysia, with the majority of it close to about 750 odd companies and above are listed in the main market, around 150 in the eighth market, and the balance around 50 companies are in the elite market, with total market cap of all those companies listed on Bursa Malaysia totaling close to 1.8 trillion ringgit. And another thing just to highlight as well, as we've been named the best stock exchange for Islamic listings, 81% of our companies listed on Bursa Malaysia are Sharia compliant. So a recap of what happened last year. I think Eugene just told you that we had 35 listings, 5 main, 25 ACE, and 5 lead. Now, the 25 ACE listings last year was the highest number of ACE listings we have ever had on the exchange ever since the inception of the ACE market in 2009. From those 35 listings, we've seen 3.5 billion ringgit raised from the 35 IPOs, and 11.2 billion of total market cap entered into Bursa Malaysia from those 35 IPOs as well. The largest IPO last year was Farrish, which had a total market cap of around 2.5 billion ringgit, and they raised around 1 billion ringgit as well from the IPO. And in terms of oversubscription, you can see how well and how very receptive the investors have been to Bursa Malaysia as well. We've seen 4 IPOs had above 100 times subscriptions, with the highest being 132 times for a company called Coraza Integrated. And as of 31st January, 75% of the companies that were IPO'd last year are currently trading above their IPO price. So it shows that the IPO market has been more vibrant and been quite resilient in that sense, being traded above the IPO price ever since they were listed on Bursa Malaysia last year. In terms of sector composition, you can see that we have a whole variety of companies, type of companies that was listed on Bursa Malaysia. Now, if you go back to probably around 30, 40 years ago of companies that were listed on Bursa Malaysia, you'll see that most of the companies were mostly commodities-based, maybe tin, rubber-based companies that were listed on Bursa Malaysia, as well as plantation companies as well. But these days, you see a whole wide variety that reflects the diversity of the sectors that is currently in Malaysia as well. So you see a lot of companies on industrial products, consumer products, construction, healthcare, and financial services as well. But one thing that we do want to highlight is that the tech sector has been great with gaining traction. More than a quarter of the companies listed last year, 9 companies actually listed last year, were from the tech sector. So it shows that there's a great interest in the tech sector, and they've been very well received as well. Just one thing as well, just another thing I want to highlight. There's one company that's from the plantation sector that was listed last year. And this is quite interesting. They were the first actually to be listed on Bursa Malaysia from this sector. There was this company called DSR Taiko that was listed. And they were actually durian plantation and producers as well. So that was the first on Bursa Malaysia, a company that actually does durian, producing durian and also its products as well, to be listed on Bursa Malaysia last year. So as you can see, Bursa Malaysia, we welcome those companies that are, we welcome a whole wide, diverse companies to be listed on Bursa Malaysia. Yeah? These are the earnings, the valuations of companies that's been listed on Bursa Malaysia last year, you can see that the average price to earning multiples of those companies in certain sectors are trading higher based more on demand that is received. Now, price to earning multiples is usually the easiest way for most investors, retail investors, especially to value a company being listed on Bursa Malaysia. But just to give some highlights as well, even though price to earnings is a valuation metric that's being used out there, there are also other valuation metrics that are specifically used for different industries, such as for banking sectors, they will mostly be in price over book valuation matrix, and for plantation, especially in palm oil, it will be enterprise value over hectares, or EVH, it's known in the industry. Yeah. So let me just touch a bit on reasons for why companies go for listing. So this slide actually shows the life cycle of a company when it goes where they are and what kind of funding that they will receive. So typically, when a company started out, most of their funds would be coming from the promoters, from the owners, who would put in money as capital into the company. As they go along, they get bank financing, bank loans as they grow along. Usually, when you see a company wanting to list on Bursa Malaysia, they would typically be a company in the growth stage and the growth stage onward. So usually a company that's in the growth stage, they'll be more suited for the lead market. If you're in the late stage, you'll be more suited for the ACE market. And if you're a very mature company that you have a dominant position in your industry that you're on, then you're more suited then for the main market. I also just want to highlight as well, apart from all those typical financing that's available out there in the market, there's also alternative financing as well that's available, such as your angel investors, venture capitals, and private equity firms that can also invest in your company for fundraising. And as well, we have also other alternative financing, such as equity crowdfunding, ETF, and P2P financing. And something that's quite new is the IEO, the initial exchange offering, which I think SC just gave the license last year to 2 firms. They've just gotten that license out, and I think they'll be launching quite soon. So just keep your ears on the ground for that one. I think that one would be something quite interesting that'll be coming on market very soon. So I think this is a question most people ask: why do I list my company? I'm going to lose out some ownership of my company to give it to the public. So why should I do that? That's a question that a lot of people ask. But I think the main thing, the main reason why a person would a company or promoters would actually want to list their company is to unlock the value of the company by allowing your shares to be publicly traded. Now, if you keep your company private as a Senam Berhad, you would not be able to know what's the value ascribed to you. Being publicly traded, then you know what's the current valuation of your company at any given day, based on how on the share price of the company being traded on Bursa Malaysia. Now, getting access to Bursa Malaysia also means you get access to capital from your IPO, the initial public offering. You get your funds that you raised from first round of from the IPO itself. But subsequent to that as well, you can also raise your funds for secondary fundraising that is available, that you can tap into the market, such as your rights issues or your private placement exercise. Or if you're sizable enough, you can also raise funds via the bond market in that sense. An IPO also allows certain investors that's been with you for maybe quite the exit or partially exit some of their investment there, so that they can get some of the returns back to their investors as well. So that's one way as well for investors to exit from their investments via IPO. Now, an IPO also helps to facilitate growth, especially via M&A. Now, when you do M&A, previously, if you're a private company, most of the time you have to use your financing from either from your own internally generated cash, or maybe from financing that you get from financial institutions. But from if you're listed on Bursa Malaysia, your shares is currently now it's a currency that you can use, and you can trade it as well to give it to the vendor to exchange as part of consideration when you buy them over. So that's one reason how you can also save your cash flow, or try to manage your cash flow as well when you do M&A in the future. Enhanced credibility. Being a PLC, you have high level of transparency and corporate governance. This also entails you if in most situations you can get a better financing rate from your financial institutions. You can get lower financing rates as well, VAV if you are a private company versus a private public listed company. Because of your higher transparency that you have, you announce your quarterly results so people know what you do, and whatever activities that you do will be announced via on Bursa Malaysia. Of course, you can also use a company being a PLC. You can create awareness, a branding of your company, saying that you are a PLC company, you have high standards and all that. Now, another thing that I think is very important for most people, if they really want to decide to go for an IPO, is actually an IPO is an incentive for your current employees. Now, in this sense, you can align your employees to stay for the long haul to the company's goals via maybe give them share option schemes, employee share option scheme, ESOS, or if they're senior people, you can do it to a long-term incentive plan or LTIP. So let's say if you have a CEO, you want them to stay for a very long time, you might offer them certain shares in the company, and it will be vested over a certain period, over maybe, let's say, over 5 years. Let's say they meet certain KPIs at year 1, you give them this shares, at year 2 this shares, and so on and so forth. This is the way how currently right now Elon Musk is the richest man in the world to this incentive plan here via Tesla shares, of course, not through Twitter. Lastly, you can also widen your shareholder investor base as well via liquidity of shares. When you offer your shares out there in the market, you have a bigger shareholder base, which will then trade your shares, which will create liquidity, and from there you can create value and you can monetize your shares on the open market. Other reasons as well why you want to go for IPO, especially if you are a family-owned business, it's more for succession planning as well. So you can actually plan ahead for your shares to be passed on to your family members, and maybe hopefully your children will take over the business in the future. But even if they do not, it can be still run by professionals, and they can still hold on to the company shares moving forward and still own something, and probably earn dividends from the company moving forward in the future. So let's talk a bit about the marketplace. Now, in Malaysia, there's 2 approving authorities when it comes to IPOs. There's Bursa Malaysia, the exchange itself. We're also a regulator. We regulate the marketplace, Bursa, and we are overseen by our big brother, the Securities Commission Malaysia. So when it comes to IPOs in Malaysia, as I said, there's the 3 markets: the main, ACE, and LEAP market. So anything to do with the ACE and LEAP market will be going through Bursa Malaysia. Ever since 1st of January last year, 2022, all IPOs related to ACE market will go through Bursa Malaysia. Previously, it would still go to SC for looking through the prospectus, but now everything will be done in one place. It's now a one-stop center for everything related to ACE market. So if you have any ACE or LEAP market applications going in, it will only be viewed by Bursa Malaysia. So anything to do with the registration prospectus will be done by Bursa Malaysia. Whereas if anything to do with the main market, that will still go to the Securities Commission Malaysia, the SC, for approvals and whatnot. So as I said earlier, we have 3 markets on Bursa Malaysia: the main, ACE, and LEAP market. So typically, the companies that's listed on the main market, they are more for established companies, very mature companies who are leaders in their industry. So you're talking about with huge market cap companies such as Maybanks, Sam Darby's, for instance. As for the ACE market, it's a sponsor-driven market. So you have a sponsor who will be there to guide you in your first 3 years when you are a public listed company. So the ACE market is more for growth prospects companies, those who are trying to grow themselves to become more matured in their field. And lastly, you have the LEAP market, it's an advisor-driven market. It's more for SMEs companies inside there, and they are only open to sophisticated investors, which means they are only open to investors that are recognized under the Capital Market Service Act guidelines under Schedule 6 to 7. There's certain lists inside there. Usually, typically, they are more on high net worth individuals or corporations that has been recognized by that stated inside the CMSA. So quickly, just a quick introduction. As I say, this is a brief introduction to the listing process. So as I said earlier, there's the 3 markets: the main, ACE, and LEAP market. So typically, the main market, there are advisors who will be the principal advisors. There are 17 advisors that can do main markets. They typically are the investment banks or some security houses that are approved by Securities Commission to do the application. The ACE market as well is also for principal advisors as well. They are registered as sponsors, also again to those 17 advisors that's already in the market. Whilst the lead market is open to the principal advisors as well as certain eligible corporate finance advisors. So your pool of advisors to list a lead market is wider, and there's more of them. So so the lead market is more for that, for those advisors as well. Now for admission criteria, the main market, there's 3 criteria that are available for you to go to be entered as a participant in the main market. The typical, the usual way that most companies goes for an IPO in the main market would be, the first one would be the profit track record. So it means that if you are a company that in aggregate, you achieve 20 million in aggregate, you have uninterrupted profit for the last 3 to 5 years. That means you can't have any losses between those 3 to 5 years, So uninterrupted in aggregate 20 million, as well as your last financial year, you meet at least 6 million ringgit in profit after tax. So that's the first way, the profit track record. Now, the second method is the market cap route or market capitalization route, where you need to prove or achieve a valuation of at least 500 million ringgit when you go for an IPO at that point of time, and you have to show a 1 full year of operating revenue. So even if you're loss making, you can actually be listed on the main market via this route. So this second option is it's also open for companies that is like unicorn companies that want to list on Bursa Malaysia. This is one of the ways that you can get listed on Bursa Malaysia. So you don't have to show only profit to be listed on Bursa Malaysia. Even if you meet that market cap route, you can still be listed on our exchange. And lastly, it's very rare that you see this route, is the Infrastructure Project Corporation or the IPC route. So this is mostly for companies that are under concession or under license with at least 15 years of concession or license period left for that business or that project that you have. So usually this is done by previously, if I'm not mistaken, it was done by Plus, and Plus was the last one. So usually it's those kind of infrastructure projects that will go to the IPC route. Now for the Ace and lead market, now you do not need any profit. Any minimum profit to be listed on these two markets. So if you're loss making, you can still be listed as long as you demonstrate potential. However, there is since this is RDS webinar, there's a caveat to that. So even though they does state that there is no minimum profit for operations to be listed on the ACE market, especially on the ACE market, you would typically see most advisors would actually put a minimum profit test that they will ask the company to have. Usually it'll be around, we've seen it to be around, on average, around 5 million ringgit on the last financial year. Now, why do they do that? Since, Bursa Malaysia does not impose such requirements. Now, this is more to do with most of them trying to manage because what happens is, because when you do an IPO, the cost of doing an IPO could be quite high. Typically, an IPO for the ACE market could range between 3 to 5 million ringgit. So most of the advisors want to manage that because as I stated earlier, your valuation when you go for an IPO will be based on price to earnings. So a huge chunk of your expenses for that year when you do an IPO might be expensed out to your profit and loss, and so you might take a big hit on your profit and loss for that period. So that might lessen your profit for that year and might impact your valuation if you were to go for an IPO at that current year. So that's why sometimes, most of the times, some advisors would have a minimum profit record that they put for the companies that they're taking on. In terms of moratorium is whereby the promoters of the substantial shareholders of the company is not allowed to sell their shares. They have to put it under moratorium. They have to hold on to their shares. They cannot dispose it off in the market. So for main market is 6 months. So the promoters cannot sell their shares for 6 months after they strike the gong in Bursa Malaysia. But for the ACE and lead market, you'll see that the period is slightly longer. For the ACE market, it's 3 years, and for the lead market, it's 4 years. Now you might be saying, why? Why is that? Why are they holding on for longer? It's because, as I stated earlier, the ACE and lead market is slightly more riskier businesses. So we want the promoters to stay on, to be still a major shareholder of the companies, so that whatever plans that they have stated inside the prospectus, they can execute it and ensure that it goes according to plan. We do not want them to leave after 6 months. They don't want to just after 6 months, they say, goodbye, I'm done, bye-bye. We want them to stay for the long haul, make sure that they execute all the plans that they have stated inside the prospectus. so that they can grow the company together with you. Public spread for main market and ACE market is 25%, but the number of shareholders is slightly different. For main market, it's 1,000 shareholders. For the ACE market, it's 200 shareholders. For the lead market, you only need to give up 10% of your shares to the public. Now, there is no minimum shareholders, so there can be just 3 persons that hold that 10%. It's more than enough already, sufficient already. So there's no minimum number of shareholders for a lead market, yeah? So directors and committees, both the main and the ACE market, yes, you need independent directors inside there, and also you need certain committees. An important one will be the audit committee and the nomination committee as well. You need that for both the main and the ACE. For the lead market, because you're trying to keep costs down, there's no requirement for you to have an independent directors, nor do you need any committees, no audit com or any nomination committee. So even the existing executive directors of the lead market can still, that will be sufficient for us now in the lead market. For the core business, main market has been identifiable core business with majority, and you have to make sure that that core business, the one, especially the one that contributes significantly to the company, is majority owned and managed by the PLC. Now, your core business is not allowed to be a holding of investment in other listed companies. That cannot be your core business, yeah, for main market. ACE market, same thing as well. Your core business should not be a holding of investment in other listed companies. For lead market, it's just you have a clear identifiable business. In terms of IPO route for the main market, it's the conventional. So conventional method means your typical IPO route. That means you submit to Bursa or to SC. Sorry, in this case, it will be to SC if it's the main market. That's the conventional route. Of course, you can also go there's also 2 other methods available for you to go to the main market. Would be the SPAC, the special purpose acquisition company route, as well as REIT. So only SPACs and REIT can only be listed on the main market, not in any other, not in the ACE or the lead market, yeah? ACE market will be the conventional route, and for the lead market, it's conventional, but you can also do it via introduction. What that means is that you already have your set investors already inside the company by the time that you launch your prospectus, or sorry, your info memo. For lead market, it'll be info memo, it's not a prospectus. When you launch your info memo inside the lead market, your investors are already in. So when you go to the market, it just be via introduction. You just want to just be listed on Bursa Malaysia, and you can just try to go, and that's it. You don't have to find, you don't need to find investors at that point at that point in time if need be, yeah. So I've just talked about the quantitative criteria. So how about the qualitative criteria? There's also it's not just numbers only for you to be listed on Bursa Malaysia. There are also other criteria as well that we look into at companies that want to be listed on Bursa Malaysia. And these are typically the three main things that Bursa Malaysia usually look at. Now, the first one is public interest. So what that means is that the company that is coming on board to Bursa Malaysia, their business activities must not undermine the public interest. So they should not have any impact to religious sensitivity or morality or ethics. So, for instance, if you are in the business of gun manufacturing, for instance, that will be very difficult for you to, in other words, it won't be difficult. You won't be able to be listed on Bursa Malaysia. Yeah? Just giving you a heads up on that one. Secondly, is the conflict of interest. So if there's any conflict of interest situation that you have, it has to be addressed and mitigated by the time that you want to submit to Bursa Malaysia. Now, certain conflict of interest will involve conflict of interest involving a substantial shareholders and directors. So for instance, let's say your company, the directors have the business does a manufacturing, let's say rubber manufacturing. He has one company that does it, but he might have another company as well that he has with his brother, for instance, outside the group. It's still majority ownership. He wants to keep it outside the group. He's not able to do that. All of these companies that is doing something that is similar has to be grouped under the same umbrella. So if you have those kind of companies, the substantial shareholders, the directors have those kind of companies, they have to make sure that they are all covered into one single entity. Yeah. And of course, lastly is conflict involving advisors, especially advisors that give you loans, financing as well. So usually, typically, when your investment banks, for instance, like your main banks, your CIMBs or your RHBs, for instance, they have an investment bank, and they also have the commercial banking side. So if they give out loans to you, they have to ensure that those interests, this conflict of interest, are mitigated. Usually, they would know what to do about it. The banks have done this, and they're used to it already. So they should know how to mitigate those conflict of interest positions. And lastly, a very key buzzword right now in Bursa Malaysia, corporate governance. I think everybody know about that one recalcitrant company causing us some trouble last year. So we have always given corporate governance a very high emphasis. We always emphasize this very highly in Bursa Malaysia. So your past corporate conduct of the company and its group, your promoters, whoever they are, your CEOs, your CFOs as well, your substantial shareholders, your major shareholders, your conduct in previous years would be a huge indication of things moving forward. So if you are undischarged bankrupt, you will not be able to list your companies on Bursa Malaysia and so on and so forth. Yeah. So bear this in mind. There are other constituent criteria as well, but typically these are the three key things that we look into when we assess companies to be listed on Bursa Malaysia. I think it's also the same key things as well. The advisors as well look into when they take on companies to bring on to IPO and to Bursa Malaysia as well. Yeah. So actually that would be it from me. This is the contact details of the team that we have on Bursa Malaysia. So if you do need any help, if you do want to start your IPO journey, or if you need any assistance in that respect, you can reach out to us. Our contact details is right up here. You can just jot it down and just drop me an email, just me a buzz, or any one of my colleagues as well, and we'll be more than happy to assist you. As I said, my part is just a very brief introduction to the listing process. The second and third part will look at other aspects of the IPO process as well. Yeah. So I think that's all on my side right now, Eugene. So if it's okay, I'll hand it back to you.
Thank you so much, Farrish. Thank you. I think that's quite comprehensive. Reminder to all participants, so there is a Q&A function. There's a Q&A function. If there are any questions as we go along, please use that function, and if there's sufficient time, the panelists will respond. And of course, if we don't have time, Farrish has already set up his email. So it's farrish@bursamalaysia.com. Farrish as in F-A-R-R-I-S-H. Yeah, Farrish at Bursa Malaysia. Now, the next and final speaker, now you may be wondering, why are we having a tax partner presenting? Now, so long as you make money, maybe even if you don't make money, but so long as you make money, it may attract tax issues. Now, the strange thing is, in the course of us doing IPOs, as what Farrish has mentioned, aside from meeting the quantitative requirements, so you may have the numbers, you may actually have the financial track record, there are also qualitative requirements. So typically, there are issues which you may have to resolve before you submit your application to Bursa or SC. And Bursa or SC, so SC in the case of main market, so you will probably need to resolve these issues. They will want these issues resolved. And some of these issues that I've encountered are actually tax-related issues. So in fact, there are a number of IPOs or potential IPOs where we are not, RDS is not even the IPO law firm, but they've actually approached Sarah for advice on tax-related issues. So without further ado, we are quite privileged to have Sarah to share on his tax-related topic. Yeah, Sarah.
Very good afternoon, friends. Thank you for still staying on at this hour. I'll just go straight to the issue. I intend to cover on tax concerns in relation to interest and borrowing cost. Eugene said tax is a concern that we all have. Without a doubt, it is. If you are going through a tax audit or tax investigation at the moment, let me congratulate you. That means you're doing well, right? The tax man only visits you and wants to know you better when you're making money. So if you are being targeted by the tax department, you must be very proud of yourself that you are doing well, okay? And they want to see you. Because if you're not making any money, the tax department doesn't want to come and see you, isn't it? So here I want to focus on financing costs, because financing is a major aspect that we got to look at when it comes to raising funds in the course of wanting to go for listing. And I intend to share with you some of our recent cases that we won in court, essentially the case of KM and M. Berhad, where the court took the position that borrowing costs other than interest or over and above interest are all deductible expenses. Now, the general section you need to know about expenses in Malaysia is Section 33(1) of the Income Tax Act. It is a very unique section where all income that is that you bring to tax, that you intend to bring to tax, the expenses that you have incurred in order to earn that income, those expenses are tax deductible, and 33(1) is the mother provision or the basket provision that allows you to take all those deductions. And very briefly, this section says, for you to take a deduction, you must have an expense, outgoings or expenses, wholly and exclusively incurred in the production of income and not prohibited under Section 39(1). Now, what is wholly and exclusively? You look at it on a case-to-case basis, how it is part and parcel of the company's working expenses, and you must be able to demonstrate in court that this expense was only incurred for this purpose and no other purpose. That is the essential point here, that this expense is laid out in the process of profit earning. And a nice case to illustrate this is the case of Bentley from England, where a firm of lawyers joined a club to meet their potential clients. And these were all solicitors specializing in maritime work. And because the ship captains were very busy, and in the 50s, they joined the club in the middle of London, and that was the meeting point, halfway meeting point for lawyers and their clients. And that is where they discussed and drafted papers on the spot and got paid. The lawyers in England wanted to take a deduction for all the expenses incurred during this lunch that they hosted these captains. I'm sure the lunch in the 50s were more exciting. They would have had some sandwiches, or together we did some, I'm sure, with some very good gins. And all these were held by the English court to be deductible expense. The tax department argued that these expenses are all, makan and minum, not deductible. But court said, no, the only purpose for the makan and minum was to get money, to get the clients to engage them to do work. So I want to highlight this to show that the concept wholly and exclusively is very wide. It's on a case-to-case basis. There is no hard and fast rule as to what is wholly and exclusively. Of course, the other thing is, it has been production of income. Case of Sevier, an old case that we did for a pharmaceutical company. Court said, look at the business holistically, look at it as a whole one operations, and the expense must be incurred in order to enable us to carry on and earn profit from the trade. So these are the basic concepts. I think these are all common sense concepts. But what are the usual borrowing expenses that we incur? Now, the most common borrowing cost that we incur is interest. But interest is unique because Section 33(1)(a) says if an interest is incurred, whether it's for revenue purpose or whether it's for capital purpose, it is a deductible expense. That is good. That makes life very easy for all of us. That means if you take interest and a loan is for a business purpose, then that particular expense in relation to that interest is deductible. But interest is not the only borrowing cost that we incur. Occasionally, we also incur guarantee fees. This is especially when subsidiaries go and take a loan and the holding company is giving guarantee to the bank in order to sustain or to guarantee the loan that's given by the bank. Now, guarantee fees are they deductible expenses? That's number one. Number two, I'm going to skip these cases and I want to highlight other expenses first. Other than guarantee fees, you have a commitment fee, you will have agent fee, you will also have stamp duty, you will have arranger's fee. All these expenses are deductible under Section 33 if you're able to show that the purpose of the financing of the expense is to finance the working capital of the company. So this is very important because the working capital is incurred. You take loans to go and buy machineries, and these are all on assets, but day-to-day working staff, you go and buy stock or raw materials, you pay consultants, all these expenses, such as guarantee fee, arrangers fees, commitment fee, prepayment penalty, stamp duties in relation to such loan arrangement, legal fees, I park all of them as borrowing costs. Courts have said these are all deductible expenses. And this very nice passage in English, the Singaporean Court of Appeal is very helpful, because the court said, look at the purpose of entering into the loan. What was the sole purpose? Is there sufficient relationship or linkage as to establish that these are all expenses for working capital? Similarly, what the Indian Supreme Court also says, are the borrowing used for business purposes, and as long as it doesn't create an asset or a full-time advantage or a permanent advantage, these are all deductible expenses. Friends will be wondering, why is this lawyer Saravana repeating something that we so basic, common sense? You see, the tax department won't come and ask you immediately after you do the transaction. They'll come and ask you 5 years down the road. And that is where your problem starts. Because most taxpayers, unfortunately, have very poor record-keeping culture. If they keep records, they don't know how to keep them properly. They don't know how to keep a robust documentation that helps them to show that they must incur as much expenses as they documents as they can to establish that these are all deductible expenses which we can use, and it is how we can push it in order to support our contention that these borrowing costs were incurred for business purposes. And the other part I want to highlight, the final parting point on this is on interest restriction. There is a thing called interest restriction. Malaysian tax law is very unique. If you incur interest and the interest is also incurred for a non-business purpose, I mean the loan is used for non-business purpose, then the interest that you want to deduct must be restricted. And that restriction is based on a formula that the law says must be applied under Section 23(2) of the Income Tax Act, but that formula is not prescribed in the Act. So the revenue has come up with the public ruling, though not legally binding, gives some guidance as to the formula that the revenue prefers to apply in calculating interest restriction. This is the second issue that I see companies sometimes don't manage it so well, where they don't keep proper formula records as to justify how they arrive at an amount of interest that they want to seek for deduction and the amount of interest that they want to add back for a restriction. So Farrish and Eugene, I don't want to take it very long. I'm more effective in answering questions because as lawyers in court, you are more accustomed to answering questions from judges and your opponents. But what I want to share today is two key things. Number one, that borrowing costs are deductible expense if the taxpayers can show that it is incurred for the sole purpose of enhancing their business and for running their business. Looked at it from a holistic angle, then borrowing costs such as interest, guarantee fees, arranger fees, commitment fees, prepayment penalty, and legal and stamp duty incurred on those such documentation are all deductible expenses. And my friends, the more expenses you're able to deduct, the lower will be your effective tax rate. And finally, if you're doing interest restriction, then you got to do it based on Section 33(2), and the guidance given by the IRB in a public ruling makes good guidelines for us in computing that. So that will be the aspect I wish to share. Remove the slides. Perhaps I can look at some questions. I think there are already some questions there. We could answer those questions given that we do not have much time here.
Okay, thanks so much. Thanks so much, Sarah. Now I just want to add to Sarah's presentation. So for any company which is interested in going for IPO, as you know, when you submit your application, especially for the main market or ACE market, you will also be submitting a draft prospectus or prospectus stage 1. And that prospectus would set out your financial track record also in the last 3 financial years, or even the last 3 financial years up to the period under review. So your numbers will be in the prospectus. It will be on SC and Bursa's website for all to see. So it's publicly available information. It's obviously also available to the Inland Revenue. So by that time, when you set up those numbers, you need to be prepared if you're visited, as Sarah has mentioned, if it's a cause for congratulations. Now, we have a few questions. So I think there's some fundamental questions to Farrish first. How much does it cost to do an IPO, Farrish?
Can you hear me?
Yeah, yes, Farrish.
All right, sorry about that. Okay, an IPO, how much does it cost? Typically, when you do an IPO, there's a lot of people involved. There'll be a due diligence working group as well. So that you will have your advisors, your lawyers, your reporting accountants, your auditors, your tax agent like Sarah, and others as well, and independent market researchers. So those costs would add up, apart from just paying the fees to the regulators as well, to both SC or Bursa Malaysia, depending on which market you go to. And also another thing that will impact you is how much amount that you raise, because there'll be a huge brunt of the fees will actually be the placement and the underwriting fees that comes from IPO exercise. But when you look at it, typically what we've seen is that an ACE market IPO will be around 3 to 5 million ringgit, while main market will be around 5 million ringgit and above. Again, depending on how much you raise. So the more amount that you raise, if you raise like something big like Farrish, then yeah, that fees can go up all the way to like 10 million ringgit, for instance. Yeah. So but for elite market, since it's lesser requirements and all that, typically the fees for elite market will be around 1 million to 1.3 million ringgit. Yeah.
One more question, Farrish. I think it's also quite fundamental, and it ties into your earlier question. Another question which I received from participants are, who are the advisors that can do an IPO? You may have touched on it, maybe just to recap. Yeah.
For the advisors part, there is a list of who are the advisors that is allowed to do an IPO for the main ACE elite market. You can find it on Bursa Malaysia's website. I think as I said earlier, I think there's something like 17 of them that can do for the main and ACE market, while elite market, I think there's another 20 odd. Oh, sorry, 10, sorry. Oops, my apologies. Around 10 of them that can do that one. So you can just go to Bursa Malaysia's website under the listing side. Try to find the advisors and sponsors list. There'll be a list of all those advisors that are able to do an IPO right there. They'll give their contact numbers as well as their website as well if you want to reach out to them. Yeah. So I think, yeah, it will be inside there.
There is a text question. So question for Sarah. This is a tax-related question. We are an industrial company and have properties. If our company wants to move these properties into another property holding, which will be within a listed group, so any tax issues?
There could be, Eugene. In fact, there's a reported case I did. GRA is reported in the tax journals. It is as a company that disposed of a piece of land to a sister company because the sister company was going for listing exercise. And the Inland Revenue Board went after the taxpayer and asked them to pay income tax, although they were not doing any form of property development business. So in this case, although you are not in property development business, given that the revenue will be able to collect more taxes for income tax, they are likely to ask you to pay income tax if you don't manage your documentations properly. So it's essential you manage your papers well so that you are able to mitigate any form of income tax incidents that may arise. Otherwise, if you manage it well, you end up only paying real property gains tax, which is very nominal compared to income tax. There's a real case, as I shared, Eugene, GRA, name of the case.
GRA, okay. GRA. Okay, so this question, I suppose, is for Farrish. any ESG requirement for main market? And besides ESG, is there any other miscellaneous consultant that the main market need to have?
Okay, in terms of ESG requirements, Bursa, there was an enhancement on the sustainability. When you talk about ESG, I mean, it goes hand in hand as well. We talk about sustainability. So actually, there was an enhancement on the sustainability requirements at the end of last year for main market requirements. I think it's available on Bursa Malaysia's website. So there are requirements under there. I think it's more to do with what certain things that you need to report on your sustainability of not only your business but also on your emissions and all that, which you need to comply with and also which you need to disclose. Sorry. So yeah, I think that one's already been applicable already, and I think there's also certain things that will be rolled out over the years. But sorry, I can't really remember offhand right now. But yeah, it's already it's available on Bursa Malaysia's website if you want to know those requirements. So beside ESG, yeah, I see the next question is, beside ESG, is there any miscellaneous consultants that main market need to have? Is there any other? I mean, for your typical advisors that you have beside that, I mean, ESG is relatively new. So apart from that, for the life of me, I can't remember any. Eugene, is there anything new from the DDWG group these days, apart from the ESG guys?
Okay, so recap for everyone. So typically, when a company decides to embark on a listing process, right, there'll be a number of advisors aside from the principal advisor. So I think Farrish, you did mention you can actually go on the website and see the list of the principal advisors, right? What the principal advisors sponsors for main and A's. So typically, they're investment banks or banks or securities firms. So there will also be in the case of all IPOs, you have the IPO lawyers, you've got the auditors / reporting accountants, right? You've got the independent market researcher. If the company is a property developer or property investment company, they probably were valuers as well, right? You have the also the internal control consultant, right? You have if I've not mentioned, then you've got independent market researcher and company secretary. The company secretary will be involved in the share registrar. Now, the share registrar. I don't think it's mandatory that you need to have an advisor who specializes in ESG, but increasingly, I see in some IPOs where they bring someone who advises and write the ESG part of the prospectus. You know, someone who gives some ideas to the company. So it's not your typical advisor in a due diligence working group, but I think there is potentially some business, potential business potential specialists there. I think moving forward there may be, that's right.
No, I mean, ESG, because most of these requirements is post-listing. So that's why most of the companies are not really looking at it currently before the pre-IPO stage. From my understanding last time anyways, it's usually more of a post-IPO thing that they put it under consideration. But unless I have not been in the industry for quite some time, Eugene, so unless there's been anything new for your side.
But I mean, so I think for the participants, we are quite fortunate because Farrish and a number of the other members who are presenting were from the industry before. So you are also from the investment banking side. So at least when you present, before you join Bursa, you have also seen from the industry perspective. Now, just one final question, tax related for Sarah. Can you provide specific examples where interest is not considered a deductible expense, and what was the issue with these businesses?
A clear example, this didn't even go to court, is example, you take a loan to pay dividends.
A loan to pay dividends. Okay.
Dividends, yeah, because if you have, if you don't have enough cash, but you got profit, but all in assets, not enough cash, you go and take a loan to pay out dividends. You can't take deductions for that. It's not in the business production of income. Dividend is after the production of income, you see, it's profits. That's one example, Eugene.
Oh, yeah, it's
I think you remember we did one transaction a couple of years ago for a big developer on that.
Yes. Okay, so we are out of time. So I'd like to thank Farrish for sharing, and also Sarah. And for the participants, thank you so much for joining us for this 1 hour. And please do join us for part 2 and part 3. So part 2 is on 22nd of February, and part 3 is 1st of March. So we've got a QR code here, so you can actually register by scanning on the QR code. So part 2, we have Wong Kong Loong, Vice President Listing Development at Bursa Malaysia. He will be presenting on the preparation for listing, and my colleague Lily, who specializes in capital markets and IPOs, will be presenting and sharing on the importance of corporate governance. Okay, so thank you so much again to our speakers. Thank you, Farrish.
Eugene, I just want to add something. I just saw one of the questions, one of the participants asked if they could get a copy of the presentation slide. So if it's okay, I will forward a copy to you in your team, Eugene. And if the participant wants it, we can forward a copy of this of my presentation slide to them if they require it.
That is fantastic, because I'm getting a few WhatsApp from my clients as well here. Okay, so fantastic. So
yeah, if you do need a copy of the presentation site, maybe you can reach out to RDS site. I'll forward you a copy, then you can just forward it to them. I'll give you a final copy after this event. Yeah,
that's wonderful, Farrish. That's wonderful.
You're welcome. And if you do, I see there's other questions. So sorry, can't answer them. But if you do need to reach out to me, you can just drop me an email on this one. I'll try to answer your questions later on. Yeah.
Right. Okay. Thank you. Thanks, Farrish.
Thank you, everyone.
Thank you, everyone. Thank you so much.
Bye bye. Thank you, Farrish. Thank you, Eugene.
Thank you. Thank you, Eugene. Bye.